How's it going there? My name is Jonathan and welcome back to another video. Today we're going to be talking about three topics, and the first one is gold, the second one is going to be the US markets, and the third one we're going to wrap up with Bitcoin. Now, before we go ahead and get started, I am going to take a look at one of the comments that everyone keeps talking about when it comes to the current sell-off in Bitcoin. And I wanted to get through this first, just so I can get it out of the way and just so that we can all be on the same page moving forward throughout this video. So we're going to head and flick over to the computer right now. As you can see, I have the CIA.GOV website up right now. And we're going to take a look at one of the comments that everyone is talking about, and that is that the current sell-off in cryptocurrencies as a whole is because everyone is doing end of tax time selling. They're trying to capitalize on their gains, and they're trying to get losses wiped off their books. And I completely understand where some people are coming from, because that is what happens in the stock market when the stock market has crashed. Further declines can occur because people are trying to sell off losses before the end of tax time so that they can claim them against future. But here's where this whole thing starts to fall apart. Let's go ahead and take a look at fiscal year. And if you're not too sure what the fiscal year is, essentially the fiscal year is referring to a period lasting 12 months and is used by budgeting, accounting, and financial industries to track a financial year. Now in Australia, we have our fiscal year, which runs from July 1st through to June 30th. Now, a lot of people are saying that we're running into this period now where we're moving into the end of the fiscal year, and it's time to get all your books together and get ready for the end of the financial year and claim all your losses, claim all your gains, etc. But you have to remember that the Australian population, we're sitting around 25 million people. And I don't know what the stats is directly, but I think it's about 10% of Australian investors are actually in cryptocurrency. That's a very small portion. We could be talking, I don't know the numbers, I'm just going to guess, maybe like 1 million people. It might be more than that, it might be less than that, I don't know. I'm just trying to give you a hypothetical situation. So let's just say that there's 1 million people out of the whole world that are selling right now. And even if it is a proportion of that or whatnot, you get what I'm getting at. Let's just say there is 1 million people in the whole world, and we've got 6 billion people, maybe let's just say 1 billion of those are investors. Is that percentage of that actually going to be enough to actually move the whole market? That is what I want to get at, and that's what I'm trying to get right now. So let's take a look at the fiscal year. This is the World Factbook, and it is on the CIA.gov website. And what we want to see is how much of the population, or what proportion of the population, are actually selling due to the fiscal year. So let's go ahead and type in June, because we want to know which countries are actually using June at the time period for tax reporting and things like that. So as we can see right now, once we've typed in June, we get Australia. Australia's first because it's alphabetical, and we actually have 21 entries. So if we go through the list, we have Australia, Bahamas, Bangladesh, Bhutan, Christmas Island, Egypt, Kenya, Pakistan. I'm just trying to call out some of the larger areas, and then we're back at Australia again. But if you take a look at some of the others, now I'm not too versed on the world and the population of each of these countries, but I can probably say by looking at these that the populations of these countries are actually a lot smaller than that of the US, that of the UK, that of China, that of a lot of Asian countries as well. And how many of these actual countries are actually investing into cryptocurrencies, and what portion of these people are actually involved in the markets? So we have 21 entries. Let's take a look at April, because we've got to remember April's already gone. And April was the peak of the market, if we can remember now. So April. We have 35 entries. Let's take a look at some of these countries. We have small ones. Canada's a large country. We have Hong Kong, again, a very large financial country. India, a big one again. If we go back to India, you'll see that they're doing April 1st as the start to the 31st of March. We have Japan, another large country. Let's keep scrolling through. New Zealand, not large, but they use this for the tax purposes. And let's keep going, see if there's any other large ones. Singapore, another large financial hub. South Africa, The UK is using the 6th of April to the 5th of April as their fiscal year. Let's find one last one. The last one that I see coming up a lot is calendar year. I could spell it, AAR. Now, if we go through this list, you'll see that the majority of these lists is actually using the calendar year, which is up until December 31st and the 1st of January, for actually their fiscal year purposes. The only other one that I didn't count was the October period, which we have some other countries using that. But that's what I wanted to get at. I wanted to get at the fact that the whole end of financial tax year sell-off is bullshit. It really is. It's the portion of the population that actually is involved in this fiscal year period is so minute and so minor. You can see yourself that most of the people that live in this world aren't even in our current financial year. So just think about that, okay? In my opinion, wrong, and it's got nothing to do with the current sell-off. But that's what makes this market interesting. So yeah, I just wanted to start off with that. This is the World Factbook. You can go ahead and check it out yourself and see what countries are using which fiscal year and where you might think of buying or selling based on those sort of data points in the future. With that said, let's go ahead and take a look at gold, because gold, my friends, has bounced. So you may recall last time we were watching the gold chart, it had topped out at one of our price points, it broke through another price point and then landed on the Fibonacci level down below. And the commentary that went around the time as we were looking to see what happened around the 21st, which as we know now marked in a change of trend for gold, at least temporarily. An important period right now would be to watch for any 50% retracement level, which is above the last now new resistance level. So support and resistance wise, I don't think that there's anything to be too concerned about that we should be watching in particular until it can get above this purple box here. So I'm just going to go ahead and remove that because we've already got these two price points pretty much covered in that purple box. And that's pretty much it. I did this video, I think it was around the 17th of June, so not much has changed. It was good to see that we did get a time and price direction change. So we had the Fibonacci retracement hit along with our time period hit, so that's time and price. We didn't have any pattern here, but that is a confirmed change of direction. Now, the only thing we're waiting for is to make sure that the gold doesn't move down from here and instead can stay here and accumulate for a little bit and then maybe even push higher if the bias is towards the upside moving forward. Again, nothing interesting has changed. It's been 3 days since the last video and I'm not really interested in, making out. Going out to the weekly time frame, definitely interesting to see that if we go ahead and just pop on a line, this is too tight, can't confirm that's a valid trend line. There's no active valid trend line on the market right now to the downside because no rules for trend line theory have been met, but we may get resistance if the market moves up over time to this point. So we'll go ahead and just leave it on there on the weekly basis. Let me go ahead and change that to weekly so it doesn't pop up on my other charts. And let's go ahead and see if there's any longer term support and resistance going on anywhere. Not a pattern, just an obvious trend position right here. So what we want to see here, go ahead and delete this, is that if price can remain above this period, this bottom line, and it can remain below this top line, then we have just a clear sideways accumulation forming. That'd be good to see. That's just on a weekly time frame. Go ahead and move that to weekly as well. Perfect, done. Back to monthly. We're sitting at all-time high areas. We are within, there's an 11% variance here between the top on the left-hand side and the bottom on the left-hand side. So that's just something we're going to watch. We just want to make sure that it can stay within this support and resistance. I would say that we have definitely some, if the market ever did move down, some strong resistance around here. From a long-term point of view, we'd had some congestion over here as well. And now any move to the upside is going to be met with the all-time highs, which is matching in with where the market hit a top just recently. If I could get that straight, that'd be awesome. There we go. So if we move in, market did hit the top, which was an all-time high top in the past, before reversing, which, if we go into our daily view, also merged with this top here, this price point here. So there's definitely a lot of congestion in the market here. While it stays within this period, we wait to get confirmation on which way this market is going. So what I want to do now is I want to switch over to the Dow Jones. I'll just take a quick look what's happened. I have no real news to point out with the Dow Jones. Let's go ahead and bring that up. Now this is the Dow Jones cycle. So if you haven't seen this already, go back and watch a few videos before, go ahead and tag it up top. But effectively, what we were waiting for was our sell-off. We wanted to get confirmation that the market could move below this point here. And once we did that, we could get some idea on where this market might be going. And if I just go ahead and line up these tops now, what I was doing originally was I was lining up these double bottoms. Now, as we could see that we had a double bottom in the forecast, and we had sort of a double bottom in the actual Dow Jones, I was lining that up to get a peak estimated, sometime mid-May. We did get our peak, it was around the 7th to 8th of May. If I go ahead and just move this back, this forecast, so I can now line up the tops because I want to see what's happening on the tops. Let's go and do that. We had our bounce, we had our move down into the 22nd, which was a very important date, which we were watching, or into the 21st, I should say. And then it wouldn't be of a surprise now if we can get some sort of rally up into a potential another lower. It'd be good to get a lower high in this instance, another lower high in August, and then our final low end of August to potentially September time. So as you can see, we're starting to get a lot of research indicating that the market this year is not looking bullish from a cyclical perspective, and all we need to do is wait and see if the actual market rhymes to that sort of past market behavior and does actually roll over like it is suggesting cyclically. Now, I'm not the only one that's suggesting that the market's going to roll over this year. There's a lot of researchers out there that are saying that this is definitely something to be looking out for. All I'm doing is just looking at similar research of my own and just saying that everything is starting to match up. And we just want to make sure that if we can get at least some sort of idea on what could happen, that's going to make us a lot happier when it comes to actually understanding what is happening and what could happen, and then lining up our two stories. Now lastly, again, there's not much that's happened. It's only been a few days since I got the last video out to you, but just thought I'd do an update on this. Let's go ahead and take a look at the Bitcoin. So I'm just going to scoot over to the daily chart to begin with. Now the last video the last update that was put out was looking for a potential low around June 21st. That would have been ideal. I thought that we may have gotten a potential low on the 20th because we did see this rally higher, though the market did break through and we might be potentially getting some sort of triple bottom formation here with this low, and this low. Let's go ahead and see how that plays out. We did have our death cross roll over on the 19th, and it is now below the 200-day moving average. So according to all the market data in the past and those that follow this statistic, that is bearish. I did go through and try and take a look at this in the past and see if it had any accuracy at all, and I do want to walk through what I found. So we had our first market peak, well, our first major market peak, at least on this chart, in 2013. After the death cross came in, we fell another 60-odd%, okay? And then the market moved up. The death cross was already activated in the past, and then it deactivated with a golden cross, and then the death cross activated again, and we actually had no significant sell-off because what actually happened was the market was already in a lower position, which if we know, you understand what a death cross is. It's the 50-day moving average crossing below the 200-day moving average. And a moving average is simply a lagging indicator that takes in the last X period of time. In this instance, if you're talking about a 50-day moving average, it's taking in the last 50 periods or the 50 days and is plotting a smoother line of what's actually happened. So any major drawdown in price is going to weigh down the moving average. And then, as you can see, we had our pull down, which was a sharp pull down, and then the market moved sideways, but the moving average was still moving down because we have a very heavy weighted drawdown. So in this instance, the market did nothing after the death cross passed. However, you can't say it did nothing at all. It did fall a little bit further into a final low before the next rally, around the $200 mark. Anyway, let's move on. Go ahead and close this off. Let's find the next crossover. Now this one here, the death cross did pass again. Again, we had our market peak in 2017. We had the death cross here, and the market continued to fall lower. We had our golden cross where the 50-day moving average moved above. We had our death cross confirm again after some downward movements in the market back in 2019. Market fell 24%. We had our golden cross. We had our death cross again. And this death cross was very similar to the last one, where we had our market weighted to the downside already before the death cross had actually followed. And then we had a series of higher lows. So what is going to happen on this death cross? Well, I think it's important to note that we have a lot of weight on this death cross that's already pulled in the market and brought the average down. I don't think that the death cross this time is going to be anything of significance, because the last two times at least that the death cross did occur, the last major 2 times I should say, is at the end of the market cycle peak. Then we have a few times where the death cross didn't occur, which was not near the market cycle peak, and we had 2 here merely 6 months apart, where the market fell 24% and the market had already crashed into the COVID low. I don't think that the death cross, and this is why I haven't been focusing on it, I don't think the death cross is really a valid and accurate trend following system to be using, because it's not really giving you an indication of what could occur. It's only telling you what has occurred, and it doesn't take into account really the severity of these declines. And that's just my own opinion. But I'm not saying that the Bitcoin price isn't going to move lower. I just don't think that the death cross is what's bringing on these lower prices, and that's why I haven't been focusing on it. Let's go ahead and take a look at the monthly. We still have the monthly above. I'll just go ahead and make sure I got live data. Okay, so the monthly, we are now fallen below the 50% level. If we close below the 50% level on the monthly basis, we have fallen below a very significant level, which takes us back to 2013 levels. I just want to actually get this. So we got 32,000. I want to make sure we get the right number here actually. BTC USD. And this is at 32. Yeah, okay, good. So currently we are below the 50-day moving, the 50% GAN level, and that is taking into consideration all the publicly available data. And if we close below that, that would be technically speaking bearish in nature, which could bring the price lower. Our next support level would be around the 24,000 mark, which is a major support level. So it doesn't mean that it's going to definitely go there, but if it did fall that low, that's where it would find the next major level support, and that's on the 60% level, which is a Fibonacci level. We have the GAN swing breaking lower. We have the GAN swing breaking lower. The Kage chart has broken lower, and it's now actually broken below prior lows, which based on Kage rules is bearish. Price wise, we have some potential support around the $30,000 level, which has provided support in the past. And if it breaks 30,000, we have the next support level at 28,000, and then we go down to the 24,000, where we're getting a lot of price confluence and price clustering happening. Sorry for losing my words there. I wanted to touch base on the potential head and shoulders that everyone's seeing just before we wrap up today. And this is what a lot of people are drawing. They're going in and drawing with, they're doing their research, I should say, and they're saying, here's the shoulder, here's the head, and now we have a shoulder. And if we get a break below the midpoint between the last shoulder and this shoulder, so if we get a break below that, then we're definitely going to go down. Now, if you take into consideration typical head and shoulders rules, the rule is this. From the head to the neckline, you have a range. Now that range is going to be a certain price point. So in this instance, if we take our range, if we take it down to this point, we have our high at 65,000 odd, and we have this point here, which is the middle of these two shoulders, so the neckline, we have around 29,000. So we have definitely a 30,000 point drop. Now, if the market was to follow typical rules of this head and shoulders pattern, that would tell us that 100% level, because with the head and shoulders rules, when we get a head and shoulders formation, the market will fall a flip of that, so it would fall down a flip of that. That would give us a range, or 100% of negative $6,000 for Bitcoin. That is why, just based on that alone, I don't think we have a head and shoulders pattern, and I think people are seeing things, and instead I just think we have just typical market action. So based on that rule alone, if the rule was to satisfy its intended rules, it's not going to happen unless we go negative 6,000 Bitcoin, which might be a good time to buy. I'm just going to skip through a few charts. I'm not going to talk about time right now. Get rid of this one, get rid of this one. I want to talk about seasonality. So what seasonality is it takes a look at, in this instance, we have an average monthly performance, and it goes back to 2011 and back into 2021. So we have 11 years of data here. And we've broken this down into months, and it tells us what are the best performing months and what are the worst performing months based over the last 10 years of data. As we can see, the market generally performs pretty well in January and February. It gets weak in March. We get a strong run up in April, and then the market starts to perform less and less during May, June, July, and then August, and then we get our worst months in September. After that, we start to see strength again, buyers start to come in. We get our strongest month in December, which peaks generally the market action that occurred in April. And then we still see buyer demand in December, but it's definitely lower than it is in November. So there's definitely a downward bias now in buyer sentiment until September, where we get our low point. A lot of the forecasts are suggesting for a lot of the markets that August is an area to be watching. And then I also agree with that. We could get some sort of shake off in September, or September could be proven to be a good time that I personally would be looking to buy if we can get some sort of low in August. And I would definitely be looking, personally, I think I would be looking to decrease my allocation into cryptocurrency in December, because I want to get this strong run up and then I want to leave. And that's just seasonality based on its own. So where are we now? Well, let's wrap this up, because this has been a very long video and we've spoken about various different topics. I don't think that we're going to get head and shoulders fall lower. Definitely not. But I'm not going to write off the fact that if we can get a break below these lows, definitely this one right here, that we could be potentially going down to the 24,000 point mark. We just got to remember that a lot of institutions are still buying around this level here. If you take a look at any major news outlet on cryptocurrency, we're getting a lot of institutional buying here. A break below that point would put them all underwater, which could be bearish. So we just got to keep that in mind. The next point, the next major significance point is 24,000. I don't know if it's going to go there. I think that the institutions, or what you would call the whales, definitely hold the most weight in this market. And I would be very interested if it did fall below the May low. Again, I'm not saying it's going to not go below the May low, but I think that the probability of it actually going below the main low becomes lower and lower as time goes on. So we'll just keep watching it. We'll see what actually happens, and we'll just play it like that. So that's all I have. This is Jonathan, and I look forward to talking to you soon.